If you look at bookkeeping in its simplest form, you might get away with just using income and expenses. But if you start throwing in terms like balance sheet and cash versus accrual, then you'll realize that there are a few other types of entries and things you need to keep track of that go beyond just plain old income and expenses. We're primarily talking about things like assets and depreciation, liabilities and equity. And in this chapter, we'll talk about how to create and keep track of those types of things in QuickBooks. Hopefully, your business will acquire assets or things of value as time goes on that aren't the products or services you sell. Sometimes when I'm talking to small business owners, they tell me they don't track assets. And if I ask them why, they say, well, because it's too hard. If I say, why again, they basically say that making the purchase is easy enough, but working with that depreciation and figuring out how to do the accounting is hard. Well, this may be a time when an accountant can actually help you. You don't have to necessarily hire one full-time, but have them help you set up your QuickBooks or give you some help on a quarterly or annual basis. I'm going to take a few minutes, though, to show you how you can do assets and depreciation in QuickBooks. It's really not that hard once you figure out what types of accounts to use. I'm continuing on with the file that I've been using, but if you're just joining us, you can look in the Chapter 18 folder and find a file that you can use as well. The first step is going to be to create some new accounts. I already have the chart of accounts open, and I need to create 3 accounts, a parent, and then an expense and a purchase account beneath that. I'm going to create these for tracking computer equipment. And I'll go through it pretty quickly because we've all created accounts before. So I'll press Control-N for a new account. I'll choose a fixed asset account and then click Continue. This will be the parent account and its name is going to be computer equipment. I don't need to do anything else with this, so I'll just do Save and Close. Again, I'll do Control-N. It's another fixed asset. And this one we'll call Computer Purchases. This time we do need to make it a sub-account of our parent account from the drop-down, which is just computer equipment. Control-N one last time, fixed asset one last time, and this one we'll call computer depreciation. And again, we'll make it a sub-account of our computer equipment. And with one last save and close, we're now ready to take a look at our chart of accounts, and we're getting ready to go. So let me just scroll up a little bit. Computer equipment with a depreciation and a purchase account under that. That's the first step, getting those accounts into place. Right now, they all have 0 balances because we didn't have anything existing, but I'm going to go ahead and make a printer purchase that we want to put into these accounts. That part is actually the easiest part. I'm going to go ahead and write a check. So I go to Banking, write a check out of my business checking from our favorite office supply store. And I'll move down to the bottom. And this is where I need to choose the correct account. This is a purchase for computer equipment. So instead of doing office supplies, which would just allow me to write off the entire purchase the first year, I'm going to scroll up so that I can see my asset accounts. And I'm going to choose my computer purchases fixed asset account. Then I'll go ahead and fill in the rest of the purchase. The amount was $675. And the memo will be color laser collating printer. Now I do have to tell you, normally you want to keep very detailed records, put in a serial number and a make and a model and those types of things. Because if the IRS ever wants to know, the more detail you have, the better off you'll be. You also can enter this kind of information in the fixed asset list that QuickBooks now provides. But we're trying to make the purchase, so we'll go ahead and do all of that. I think that's everything we need, and I'll do Save and Close. That's the first step. Now for the second step. Now I actually need to add some depreciation. It's the end of the year. The end of the year is when I take the depreciation off, and this is going to be attributed to the computer depreciation account. In order to do this, I probably need some help from either the internet or an accountant. They're going to tell me how much my depreciation is going to be. And on my $675 purchase, the amount is actually $67.50 the first year. The question often comes up, where do I put in this information? And the answer to that is in the General Journal. I'm going to go up to the Company menu and come down and choose Make General Journal Entries. Now, General Journal entries always have to be double-sided. This is that double entry bookkeeping thing in its kind of rawest form. This is the way all accounting used to be done. So I will start with an account, and it's my fixed asset account. And I'm going to take the depreciation first. I'm adding to the depreciation account, so the amount in the credit will be $67.50. And the memo will be first year color laser printer. Then I'll come down to the second line, and this is where I have to balance it out. So if I'm taking something from the depreciation, or adding to rather, the depreciation account, then obviously the second part, and the way that we did this, is to use the purchases account. And as soon as I click on the account, it actually balances for me. So unless I'm trying to split things, this is actually an easy process. Now all I have to do is press enter. And I've just saved a general journal entry. See, that wasn't too scary. I'm going to go ahead and close out my general journal. If we look carefully now at these lines, we can see the computer purchase has its value, the depreciation has its value, and we have the balance of the value on the top line, or the parent level. Ah, but hang on, my friend. Let's slow down a bit and take a look at that again. We can look at this and say, wait a second, something isn't right. After I take my depreciation, it's still showing the computer equipment, the total value, as being $675. And while I may not be a mathematician, I think I remember that if I have something that I purchased for $675, and I've subtracted $67.50 from its value, it shouldn't still be worth $675. Furthermore, the original purchase under the computer purchases account now shows $742.50. I have to be honest with you, I kind of set you up for this one because this is a common mistake. It's that debit, credit, positive, negative thing that does tend to make accounting very difficult. Let's go back up to the company menu. Come back down into our Make General Journal Entries and click on Previous to get back to that little transaction that we just did. Here's the problem. We simply put the numbers in the wrong places. We credited the depreciation account and we debited the purchase account. Let's try switching those around. Now I can do it either way. I can either move the numbers or I can change the accounts. I'm going to change the numbers themselves. So I'll debit the depreciation, $67.50. And that, of course, blanks it out on the other row. And then I'll go down and I'll move $67.50 over to the credit account for my purchases. I'll press enter. I'm going to record the changes. And I'm going to close the general journal. And let's take a look at these accounts one more time. Now our computer equipment is worth a total of $675. Our depreciation is a positive number, meaning we've taken $67.50 out, and we have reduced the purchase price by $607.50. That's the way we want this to look. Now I know that that might have been a little bit confusing, and I apologize for taking you down the wrong road temporarily, but usually people learn by mistakes. If I just would have told you what the difference was, you may not have remembered it as well. The basic thing here is to remember to always look at these numbers. We may not have been quite sure what we were doing, but when we got to the end result and we had a printer that was still worth the same as its purchase price, we knew that didn't look right. So it was just a matter of quickly switching those numbers around.